You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo, back from a sunny sojourn to the south. Say that 3 times fast. To the world of the Futures Industry Association Conference. It's always hard duty when you have to go all the way down to 85 degrees and sunny weather down there. Getting out of the frozen hellscape that is Chicago. Like, not too bad lately, though, but coming into last week certainly was. But now we're back, ready to talk some volatility. And joining me to help me do just that, first, my volatility cohort and partner in crime, the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, did you miss me while I was in my sojourn to the south, sir?
I didn't. I'll tell you, because I talked to you on Monday, and then I'm talking to you today and previous Friday. So it was like you never left for me.
You know, even though I'm away, I'm still there. You know, I got to keep the shows rolling. So the schedule never relents for me. And also joining us, speaking of never relenting, he's not relenting on any sleep at all. He's joining us early in the morning over there once again. Good old Simon Ho, the CEO at T3 Index. Simon, welcome back to the Volatility Views program, sir.
Thank you very much for having me.
Simon, does our daylight savings, does that make it better or worse for you over there?
It makes it worse.
That's kind of what I thought. That's kind of what I thought. We'll see if we can do some adjusting for you in the near future. And then also joining us, holding down the MIAX hot seat over there, is Shelly Brown, the executive vice president over there at the Miami Options Exchange. 3 exchanges, soon to be an equity exchange. A lot of fun stuff going on. Shelly, welcome back to the show. It has been too long, sir.
Thank you. Glad to be back. I think I just saw you in the 85-degree weather, though, didn't I?
Just saw you a couple of days ago. So we gotta stop making a habit of doing that. But instead, let's make a habit of diving right into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that music means it's time to dive into what the heck is going on in the world of volatility. I apologize for you listening live. We got a little bit of a late start here today. Like I mentioned, just coming back from these conferences, getting everything rocking and rolling again here in the old studio. In fact, we're so late that I know, Shelly, you have a hard out. You got to hop out in a little bit. So maybe let's start with you. You were, like I mentioned, you were kind of with me down at the Futures Industry Conference. I heard, by the way, a rumor you had some pretty nice MIAX cigars. I might have to sample some of those one of these days. I heard good things about the cigars, Shelly. But really quickly, catch us up. I know there's a lot going on in the spikes world. You got a big settlement coming up. You have the continuing to do the work, try to getting it on the retail platforms. And also maybe really quickly, if you have any interesting takeaways from that conference, what was the response? Now that was your first FIA with spikes as an actual product. People have been talking about it forever, but now it's actually listed. What was some of the reception you got from the different players, the brokers, the market makers, et cetera, when you're talking about spikes now that it's listed, Shelley?
It was our first conference as we listed spikes. It was a hot topic amongst a lot of people. I do want to correct one thing. They weren't Mayex cigars. They were actually Spikes cigars.
Oh, well,
nice.
I was misinformed then.
Well, we will send some over to you guys. Absolutely. They were a big hit, as were the discussions in the Spikes. One of the big conversations was about when's the future going to be listed. We're still looking for June, July timeframe. Those discussions are going well. Hopefully, be able to make an announcement shortly. And again, still believe that's kind of that's what one of the things that's holding us back, not having the ability to have our own future. The buzz, though, generally was positive. Obviously, people are looking for that first big trade to occur. We have some sharks swimming around the boat, so hopefully something will go up sooner rather than later. Market makers continue to gradually tighten their quotes, and they want to get through one expiration cycle. So we had a big meeting this morning in the firm about Tuesday's settlement, and we believe we're all set. And I look forward to getting to Wednesday so I can actually sleep through a night.
Yeah, that'll be exciting. I heard it was such a hot topic at the FIA that people were dressing in goth and wearing male eyeliner. It was such a hot topic.
So I see what you're doing. You're trying to make it. You love your ladies' retail, and you always have to go back to that, don't you? The Hot Topic stores. Well, then you know that means they have to have a pop vinyl of Shelley because they sell a lot of pop vinyls there too. I know. Actually, not a bad idea.
Maybe we get Shelley and Simon get them dressed all like vampires, and then they'll go and then the spike they'll be vampires, and the spike can be the wooden spike that you use to kill vampires. Because make the Vix the vampire.
There you go. You know, see.
So Spikes is the wooden spike that destroys the Vix.
There you go. The free marketing advice.
Hot topic.
The free marketing advice that comes from this show. It's so valuable. You can't even put a price on it. It is so ahead of its time. It might be a little scary to some people, but
I actually had a client tell me that they really like the name Viking for the volatility index of spike options, the Vikings. So I've heard positive things about all the naming conventions we're coming up with on this show.
I may have had a discussion with two people.
You're killing me. You're killing me with this Viking thing. I'm a Bears fan. I see it Vikings. Next thing you're going to start calling another one of my products Packers?
Yeah, but absolutely not. No, as a Bears fan, I can only go so far. So
I may have mentioned Viking to a person or two down at the conference this week, and
they liked it.
The reception was actually somewhat positive. Yeah, so yeah, I may have even mentioned it on the option block yesterday. So it may be getting a few legs out there. Well, Shelley, I know you're looking forward. Is there anything I know the settlement is kind of the big thing right now. Is there anything you guys are kind of doing internally? You want to share that really quickly? Because obviously this is the first one, kind of a big deal, particularly in the volatility space, because settlements, shall we say, have been where some of the problems have reared their ugly heads. So what are you guys doing behind the scenes to make sure this first one really kind of goes off without a hitch?
That's a great question, and we had several people ask, including several analysts ask. I know there's been some talk on the street that could be a pitfall for us, and that MIAX only has about 4.5% market share in spiders, and how will we have a liquid market? The things people aren't taking into account is, one, the spiders tend to trade most liquid and have the best, deepest, and tightest markets on the maker-taker exchanges, because when you're making liquidity on a maker-taker exchange like Pearl or any of the other maker-taker exchanges, when you trade, you get that close to 50 cent, 45 to 50 cent credit as a market maker. So it effectively gives you an extra half a penny of edge. Where if you're quoting on a conventional fee exchange like MIAX, you're going to pay the exchange fee plus possibly payment for order flow, and it's a 0.5% the other way. So the tighter markets are in the maker-taker exchanges. Those exchanges have a much higher market share in the spiders. So that's one of the reasons why the market share on MIAX itself isn't as high in SPY. But that doesn't worry me for them opening. For one reason, we have special pricing for SPY settlement opening. It's actually close to free. So it'll be more aggressive. And when you have imbalances, if it's caused by somebody doing a basket of options, it's going to push the trade price towards the bidder offer, or even potentially through the national bidder offer. The arbitrageurs across all 16 exchanges will come in and force those prices back in. And actually, the opening, we have a better market share in MIAX than we do intraday. So I'm not worried at all about the liquidity in the opening in spiders next Tuesday morning or any other settlement. We have plenty of liquidity. All the major market makers that are quoting and all the other exchanges are on MIAX, and we believe we have plenty of liquidity to support the settlement. And the prices will be both fair and very transparent.
That's actually not a bad idea to actually incentivize flow with reduced costs right around that settlement, because that's been one of the problems plaguing the CBOE forever, right? It was kind of a dearth of liquidity around that moment. That's been one of the issues that's exacerbating things. So that seems like a no-brainer, but I'm glad to hear you guys are out there doing that, incentivizing that liquidity. I know you got to hop off really quickly, Shelley, before you go. I'm going to cheat here. I'm going to bump up a listener question from the end of the show for now, because this is kind of up your alley. This comes from Aramani, I guess. This is something we've been talking about before on the show. I know you guys are working behind the scenes to get spikes listed and available on all the retail platforms as well. Aramani asks, he says, I can't find spikes on my toss screens. Is it live there? I'm assuming you guys are up with Thinkorswim, aka toss. And if not, when can they maybe expect it sometime soon? And also, I think you mentioned there was an email you wanted people to email, an address you want people to email if they have these questions. Let's put that out there again for people so they can hit that up directly with these questions.
Absolutely. So I'll start with to get in touch with us, go to our webpage, myxoptions.com, click on the Spikes logo. There's an FAQ section. You can also send emails to sales at myxoptions.com, and we're happy to answer any questions. With regard to this specific question, the ticker symbol is SPIKE, SPIKE. We believe it's broadcast on all the major data feeds. It's certainly going out over Opera, so any data feed that has Opera would have that. If you're searching Spikes, SPIKES, that's not the right symbol. It is Spike. I know that TD has done a few executions in Spikes already for some of their customers. I'm not sure if that came through the Thinkorswim platform or not, but I've not heard anybody say that they couldn't get Spike over the Thinkorswim platform. The couple of firms that were having system changes told us they'll be done by the beginning of April, so next couple of weeks.
So there you go. It is live on Toss. I kind of assumed it was. I'm going to go out on a limb and say this is probably, I think, exactly what you just mentioned. Probably a little bit of user error. I'm guessing they're searching for spikes with an S and not spike. So go back out there if you're having problems finding listeners. Get rid of the S. Spike, SPIKE, and that should, I haven't had any problems finding it on most of the platforms I've looked at, and I've tried a bunch, so it should be up there on yours, and if it's not, like you mentioned, hit up those email addresses. Well, Shelley, thanks for joining us. You can now go about, you got some stuff coming up, so go attend to that, all that settlement fun stuff while we dive into, unless you have anything else you want to leave us with, now is the time, sir.
Yeah, we're very excited. I mean, again, the interest is there. We need to see the markets tighten up. Things have been going well in general. The new exchange, Emerald's doing really well, and we're excited going forward.
You know, things are going well in Spikes Land. We haven't even talked Emerald like once, so that shows you there's other things going on. That usually would be
Emerald, we got Pearl, we got Miami. When are we going to get Ruby and Diamond?
Maybe the stock exchange. Maybe the stock exchange that they're rumoring over there coming out.
Yeah.
Coming out soon.
So you're encouraging me to open 2 more exchanges? Is that what you're telling me?
Yeah, that's what we need. Yes. You know what? I think you should. I think you should splash the market. There are 16 exchanges right now, 3 of which are yours. I think you guys should open at least another 10, so that you have twice as many exchanges as the others combined. That's what I think.
I think I'll pass on that idea. I'm sorry.
All right, sorry. They can't all be winners.
I was going to say, not all of his suggestions. You got to take let's say 70% with a grain of salt, and then there's a couple of nuggets in there. Speaking of some nuggets, let's go mine for some nuggets in the volatility space. Oh, what a week it was for those of you who were short some volatility, because guess what? It's come in quite aggressively since the last time we all gathered here together on the old program. Spikes itself is off about 5 handles, hovering right around the 12 handle right now. So that's 5 points lower than it was last week. That's a big move. VIX cash, also a similar move to the downside. It was at a 17.5 last week. Coming into this show, it's hovering around a 1270, 1280 or so. So not quite 5 handles, off a little bit less, actually. It's off a little bit shy of 5 handles, which is kind of interesting. And our old friend VVIX, despite the fact that VIX has come in, is off quite a bit as well. 10.5 handles to be precise. So we're back there at about an 80.5 or so, which is, if you listen to this show for a while, 75 is kind of the lower end of that range. When it gets down there, that's when it usually tends to bounce off it and something starts happening, VIX starts moving. We're not quite there yet, but we're hovering around 80.5 or so. So we're getting perhaps in that range where VVIX is going to start getting a little antsy, a little itchy, and wanting to move. Simon, obviously, it's been an interesting week out there on the spike side. Maybe first off, let's start there. Spikes has obviously come off more, substantially more than the VIX cash has over the past week. Does that surprise you, or is that kind of by design?
So actually, it's a technical feature that has happened in this case. So we roll slightly differently than the VIX does. So they use the whole series of weekly options as well. We chose not to. We explored using weeklies. Weeklies are very liquid in certain areas, but certainly the back dates, so the week 4, 5, and 6, can be quite illiquid. So we chose to eschew using that. So what happened was, from the 13th to the 14th, we extrapolated to a different contract month, which is why the index was down slightly more than the VIX. So it's a periodic thing that happened, and just the way the term structure looks. Just a function of the rolling of the actual index.
How did I know you were the right guy to answer that question?
Is it going to be a lot like what's the symbol for the old VIX? The old, is it VX?
VXO.
No, that's the one for OEX. What's the one that was?
That's super old VIX. That's weird. That's original VIX.
Yeah, no. Remember, there's one other VIX where you can still look at the monthly settles.
Yes, that's right.
What is the symbol for that? It's I used to have it, and I don't currently. On my screen. Maybe
come back to us later in the show if you decide.
Yeah, but
I can't recall it either.
Yeah. 1 second. I'll Google that, but I'm wondering whether the old VIX index maybe acted a lot more similar to spikes. That would be kind of my guess. Would be yes, right?
Yeah. Yes, I think so. That's fair to say. Yeah.
Oh, Simon, outside of since you get up so early, I'll give you pride of place for us here. You get the hard worker award there again this week. Outside of this larger movement in spikes than we're seeing in some other products, what else is catching your eye in the world of volatility? Obviously, a lot of downside on the screen. What was catching your eye this week?
Yeah, well, I think it's pretty amazing. I mean, last week we all had pretty aggressive bets about where vol would be this week, and you kind of thought I occupied a good spot at 15 and a quarter, and that turns out to be way off the mark. So,
see, it's a hard show. It's a hard thing to do every week, isn't it? You're getting a sense of that now.
It certainly is. Yeah, well, I mean, I think we were all bearish, and yet, I think probably Meatball was the closest, wasn't it? So.
Yeah,
it's a shame. But in terms of
I agree. It is a shame. See, look, he's fitting in already. I love it.
He really is.
So in terms of what's catching my eye, there was an article that was released by Goldman. There's a weekly sort of vol thing that they have, and I really very much agree with what's going on there. It seems to be that volatility, and in fact, I think you referenced one of these articles, Mark, later on, but volatility is collapsing everywhere. Rates vol is pretty much at the lows. Last week we talked about how vol was low, and of course this week it's even lower significantly. So I think that actually represents perhaps a bit of a buying opportunity. We also run a bunch of data analytics on the various markets around the world, and if I take a look at S&P in particular, I can see that realized vol and vol for calls, so 25 delta calls and so on, kind of across the spectrum, are in around about 17% quantile. So we're talking really very, very low readings relative to the full history of S&P 500. So my preference would probably be to buy options that are further out, simply because, with things so low, you don't necessarily hold things and have, my preference would be, I think that longer dated vol looks like it's a good buy.
Yeah, especially with the VIX futures where they are, which we'll get to that in a little bit. But first, Mr. Meatball, what's catching your eye? A, did you find your ticker? And B, what else is catching your eye out there this week, sir?
I mean, there was some I did not find my ticker yet. I will find it shortly.
We'll get to that crazy VIX prints in a minute, so we'll save those. We'll get to those.
Huge trades going up. Yeah, Vol dropped. Volatility itself is dropping. The S&P's been holding that new high of back above 2820, and that is that's been what's happening. It's been pretty crazy, and yet kind of a snoozer at the same time. Other than some of these crazy prints, it's been very much like in between prints has been watching paint. That would be what I would probably say was the big difference.
Yeah, obviously down at this big futures conference I was at this week, a lot of the attendees are international. A lot of the focus was on Brexit. And I have to say it wasn't quite as rapid this week. It took place over the course of pretty much the entire week, but there were a little bit of shades of that kind of vol annihilation we saw going. Remember going into the Brexit vote where everyone and their mother just decided, let's just wipe out all vol before the vote has even happened, and that turned out to be maybe not exactly the best choice. Again, this week we had the vote, so there are some actual facts in the air. We still don't know that much about what's going on over there, but still, people are just not at all reticent right now to crush the volatility, and that's pretty much what we've been seeing throughout the entire week. I guess they're factoring in a decent outcome in the trade war and a lot of other things, because looking at vol even going out a little bit, we're not seeing a heck of a lot. Let's look to the futures now. We're alluding to these earlier. We see about a little bit of a premium, a little bit decent steepness to that front portion of the curve. Nowhere near as backward, I think, the last time we were talking about it. So we're nowhere near backward now. There's about a 3/4 of a point or so premium for that first March future to the cash, and then the April future going out 2 months is about right around a little over 2 points in terms of premium out there. And then, as Simon mentioned, a little bit longer term vol. If you go out a little bit, you go out to July or even August, it's still only about like a 16.5. So they're not factoring in a whole lot of stuff going on over the next few months out here. Before we get into the VIX options, let's break down looking at the top spikes positions here. Again, you guys can find that on your own tickers. Type in, because I did it the first time too, so I can see why a lot of you are doing it. I typed in spikes without even thinking about it. But Spike, S-P-I-K-E. So all of you who are writing in saying you can't find it, I guarantee you're putting that S at the end. Plus, think about tickers. They don't usually run that way. Spike, S-P-I-K-E. Type that in, you'll find the top positions. It's the same positions, it seems like, in terms of the top. Or that's still that vertical, that May vertical. So a little bit longer term here as well, which is kind of interesting. A May 2025 vertical looks a little bit more distant in the rearview mirror now that VIX and volatility and spikes have come in so aggressively. And you get some 15 puts here though too in number 3. So maybe that guy was a little bit ahead of the game out there, because those puts are looking kind of meaty right now. Simon, are you of the same kind of thought as Shelley, that kind of everyone's playing wait and see to do a lot of big trades until you get that first settlement under your belt?
Yeah, I think so. I mean, it's pretty natural. I mean, we know that, VIX took about 5 years before it took off. Now, clearly, it shouldn't be the same for us simply because we're a second player. We don't have to break new ground. But, yeah, I mean, we haven't even seen a single auction. So it's only been, just around 3 weeks. So, everybody's looking forward to it. We're really excited about it. As Shelley mentioned, I mean, he didn't sort of talk it up as much as maybe I thought he might. But, obviously we've been testing that thing every single day using opening NBBO quotes and so on. So we're very confident in that. And it's one of the key things that we think is a distinguishing feature. As he said, we use a SPY that's usually super liquid. We also have the fact that the 16 exchanges involved in it, which means that there's real competitive pressure in the auction that will happen. And also there are external reference prices. So we're looking forward to doing the first one, to be honest, to be getting it out of the way. But certainly your comment is correct. People want to have confidence that the auction is going to be sound and intelligent. And, without that, people are not going to do too much trading. And that's understandable. I mean, given what's happened in the last year, as you mentioned, about people talking about the settlement, this is really crucial.
it's a good point too about VIX. I mean, it really took a number of years to really get rolling and to really start getting some actual prints. So they're expecting you guys to do something similar in 2 weeks is a little bit absurd, especially when you haven't had your first real settlement, which any other product, it wouldn't be as big of a deal. But like I mentioned before, in the vol space, it's kind of all about the settlement right now. So that's it certainly makes sense why a lot of people would be waiting and seeing to see that first one. So yeah, it'll be fun next week when we have that first one under our belts in the rearview mirror, and we can kind of talk about it with a little bit more specificity. Speaking of specificity, Mark, I know you're chomping at the bit, and you're right. The VIX was kind of options wise was kind of a snooze fest this week, except for this one. I guess I don't know because this is a little bit different. Can we call this the return of the whale, or maybe whale part 2? How should we call this?
I don't know that it's the whale. It's a totally
different trade, exactly. So it's got to be whale 2.
And I think it may be, just what people thought. It started as a medium trade, and people said that's a good idea, and kind of did the same thing. But it was just a massive put spread versus call spread that was traded for some decent size. Trader sold the April 13.5, 12.5 put spread, and against that they bought the May. It was the May quarter 27 call spread. Over the last 2 days, I think we've seen over almost 200,000 of those trade.
Yeah, it's funny. Like I said, I was at this conference all week, so I didn't have a chance to really, pay attention to my screens this week. So coming into Showtime, I was kind of just refreshing myself on some of the flow that went up throughout the week. And I saw today's print, and I was like, "Well, that's huge." 360,000 just today. He did 90,000 each on each of those legs. And I said, "Oh, that's enormous." And then I happened to start looking back in the week, and I was like, "Oh wait, they did it again." And oh wait, they did it again. This thing went up many, many hundreds of thousands of contracts on this. And you're right, it was effectively, it was this April 12.5, 13 put spread versus this May 25, 27 call spread. So kind of interesting size-wise. First off, of course, that's just an enormous trade. Secondly, you're right. It is different than the whale. The old whale we used to talk about, what was that, a year and a half ago or so, until all the spike happened in February, and then he kind of got out, spike, pun intended. And he had the ratio vertical to the upside, as I recall, where he was long and then short a bunch to the upside, which kind of came back to burn him for a bit. Then before he finally bided his time, and it ended up working out. He was able to close out the short units. But this guy a little bit different. This guy doing this 12.5, 13 put spread in April. Again, 90,000 times just today. Doing that looks like about 14 cents or so. And then doing the May 25, 27 call spread for a dime. So he's doing it. He's been ranging around close to even all week for doing this spread. Again, doing that 90,000 times. And again, it's a very tight vertical, 2 handles. So all sorts of interesting. Let's just start there, Mark. What do you think of this trade? You like this? And this is kind of a theme we've been talking about for a while. Financing long upside with some downside, right?
Yeah. Oh, by the way, the symbol was VIXMO, VIXMO.
Oh, okay.
So I finally feel okay that it took me long enough to find it, but that is the SIBO standard VIX index, and I'll tell you what it's doing today, and we'll see if this is a lot more like spikes. VIXMO is, well, they're not giving me the price right now on live vol, believe it or not. $12.55. So, and the spikes is, sorry folks, I know you're clamoring for this. Yeah, the spikes is 12.30. So this is about these two are a lot more similar than where the regular VIX is. Yeah, and getting back to our trade, selling a put spread to buy a call spread. I don't hate it. Here would be my argument against doing the call spread. That tight. What are you actually getting out of it?
That was my question. Why are you doing it 2 points? It's a lot of work for a 2-point vertical.
Yeah, and then 2, vol is so cheap. Why are you I mean, I could come up with better ways to structure a hedge than the simple little call spread. Now, that being said, I've definitely seen worse trades. I probably would rather do April versus April or May versus May than April versus May, especially given historically, I think our old friend Russell Rhodes would say that April is has the average lowest VIX out of any month. Isn't that correct?
I do believe so. I saw him this week as well. He's floating around.
Oh, yeah? What did he
doing
have to
his
say
research.
other than, hi, I'm with Tab?
He's loving life over there. He's loving life over there. We'll have to get him on the show back again one of these days.
Yeah, we'll have to.
And chat with him. But he's loving. Yeah, there's a lot. I kind of had similar thoughts to this. The April versus May. The only reason I could think he wanted to do that is he wants to have it go out obviously in April and do it again in May. And then, by doing that, maybe he's going to add, obviously he's premium conscious, right? Because he's lined it all up to work out fairly well. So if he does it, he's probably thinking in his head of heads out there, if he does it again one more time in May, he could actually get a credit for doing all this madness.
Well, if you're not premium conscious and you're trading VIX options, you're losing money. Congratulations. You have to be premium conscious when trading this thing. And that would be my, But that would make some sense.
The one downside to that, though, is he's letting the premium consciousness dictate his strike selection.
Exactly.
And that's what I'm not a fan of.
I don't know that I would want to be short that 13.5, 12.5 put spread in April after what's just happened in the middle of March, especially considering April expiration, I believe, Easter is the 20th. That April expiration is going to have – because I believe expiration is the 17th. There's going to be a
you think we
lot
flirting with some downside?
Yeah, you want to be short. You want to be long VIX into a 3-day weekend. How's that into all around spring break? How's that sound?
That sounds like all sorts of goodness ahead. So yeah, there's a lot to nitpick with this one. I think structurally, I'm with you. I don't mind it. It's not offensive to me, but I don't like when even at this, that just shows, we see this with 10-lot retail guys all the time, but this guy's doing 360,000 contracts just today, and he's doing the same thing a lot of 10-lot retail guys do, which he's letting his desire to be premium neutral dictate everything else about his trade.
Yeah. Now, next thing you know, he's going to not want to close because he doesn't want to pay commission.
Totally. He's going to do exactly.
Anytime someone says that to me, I go, if I could, I would fire you as a client. Because that is the dumbest thing you could possibly say.
You gotta hope the guy's slinging 360 at a clip. He gets a little bit of a break. You hope.
Yeah.
Simon, obviously this is an interesting one. I'm sure you might have the same nitpicks we do. Maybe you saw this go up. It was kind of impossible to avoid it. It sucked up all the oxygen in the volatility room, almost literally this week. What are your thoughts on this the general nature of the trade, and then B, do you have the same maybe nitpicks that Mark and I do?
Yeah, I do. I mean, clearly this is a kind of an oddity. As you say, frequently April is a low vol month in the first place. We're already talking about indices being spikes at 12.3. You're talking, the thing is already out of the money. And I'm also with you with regards to the width of the spread, because between 25, 27, yeah, I suppose you make $2, but and he hasn't spent a whole lot in terms of premium. But it seems like, as you say, it's an awful lot of work for a position that is not going to go gangbusters. One comment I will make though, you talked about unwinding the thing and the cost of doing that. He could always unwind it using spikes, and he would pay virtually nothing for that.
I was just going to say. You wouldn't turn your nose up at this print going up in spikes, would you? Even though,
maybe that's why they have that spikes May. That maybe he was just playing around with that 50-lot call spread went up. Maybe he was just playing around with spikes, seeing what he could get done, and he's planning on bringing $500,000 to spikes come next week.
Yeah,
it could happen.
Bring it on.
You find out who this whale is, and you start whispering a little spikes in his ear. We could see those numbers.
Tell you what, you come in on my offer, and I got some for you if you want to buy that spike offer. All right, you hit my bid and lift the offer in that spike call spread, and I will give you a bunch.
Done.
There you go.
All right.
Yeah. Outside of that, that was all the oxygen in the VIX room this week. There were other things going up. It seemed like time spreads was kind of the order of the day this week. There were some other ones going up. It's like even today, a 10,000 lot of the April 20 May 25 kind of a calendar going up there again. Somewhat premium neutral as well. So premium neutral time spreads maybe was the order of the day this week, but that was only 10,600 times. Huge in any other product. Out this week, particularly in VIX land, not so much. It was kind of all, and I've heard people calling it all different things. It's just a vertical finance by puts. It's not. It's technically it could be a risk reversal too. You can call it that. Yeah, it was printing all week long. Yesterday, 90,000 times. Wednesday, 79,368 times. That's an interesting amount. So all sorts of fun stuff going on out there. Speaking of fun stuff, you guys have been waiting. We know you've been writing to us. You guys have been waiting and waiting and waiting for the former VXX, now VXXB, to cross that 30 threshold. It kind of flirted with it recently, and then it bounced back off, got back up to 34 and change last show. So it stubbornly refused to break. Remember, we talked about it in January with the old VXX. It got so close to 30, and all the open interest was south of 30 in the puts, and it never quite got there. And here we are this week. Fast forward a week, and guess what? It blew through it pretty aggressively. It's off about 6 handles from where it was this time last week. It was about a 34 and change last week. This week coming in, it's about 28 and change. So shy of that 30 handle. Officially, I do believe, and I know
hand slam on Monday.
It flirted with it briefly. Did it? It never, Mark. It never closed below 30 prior.
And Fred,
to this, did it?
I gotta call it a.
Mark, you there?
Yeah, I'm here.
I'm sorry.
Yeah, it
never
it
officially closed below 30, did it? Until VXXB.
I saw a 29.98 close one on expiration. Maybe the week. Last week or the week before.
Yeah.
I think maybe we closed 2 cents below, but no, not like this where, we're threatening to get back to 27, not even 30. I mean, it's really getting gut punched and kneecapped and you name it. They are slamming VIX and VXX and you name it. Hey, I did want to point out one March trade that's going up for some size today. There's been a customer buying and I'm sure you saw this as well, Simon, the March 13 puts have traded up a quarter. I mean, the only price they've basically traded all day is a quarter, and there is about, in VIX, there's really decent size here for something that's expiring on Monday. They've traded 26,000 of these today against open interest of 59,000. I'm not sure these are closes. I think they might be opening, but I could be wrong.
Maybe someone taking advantage of, he's not quite doing it in March, he's doing it in April, but someone has been hammering away at those puts for some size this week. Maybe gobbling a few up, not the worst thing.
Yeah.
Simon, you a fan of those downside, a little bit of downside there in the near term?
Yeah, look, I'm just ruminating on that now. I hadn't seen that particular trade, but I'm just going through my mind. It seems, I suppose for a quarter where we are right now, I think I'd buy it rather than sell it.
It's a synthetic future, basically. It's a cheap play to be short options, right? That's what they're thinking, and they must be gunning for a, like a sub 12.5 come Tuesday. I like it too. Trade I was looking at instead, and you can still do this on the screens. How about the 13.5, 12.5 put spread in VIX for about 45 cents? I like that better than I like the quarter purchase, personally.
I like that too.
This is in March? Okay.
The March 13.5, 12.5 put spread for, let's say, 45 cents, I think is a nice play on volatility, kind of staying where it is, right? We get a 12.80 VIX, and you pay 45 cents for that, you make a quarter. That's a Russell Rhodes classic. That's the Simon Ho trade of the day. I just started that one.
There you go. Maybe Simon should make his own trade of the day, though. What do you think?
Simon says, buy this spread.
There you go. Let's put words in his mouth. The official T3 trade of the day, not by T3. Let's see what else was lighting it up out here. Jumping back, we're talking downside. That's what everybody wanted in VXXB. Ironically, I think people just got burned too many times because we saw every expiration cycle in VXXB so far this year. It's been nothing but puts south of the 30 strike. I guess people just got tired of that. They got tired of burn. Maybe those people all just blew out because can't do that forever. What we see now in the top positions out there in VXX, they're still small compared to what they used to be, but they're getting some size out there. And guess what? Spoiler alert, listeners, the entire top 10, except for one, is all calls. So people are getting burned on both sides of the fence right now in VXX. VXXB is maybe the new Widowmaker. The number one position, the March 45 calls, they ain't looking too good right now. 32,600 of those. Number two, the June 80s. You got some time for those, but that's a bridge. That's a pretty far bridge to cross there. Number three, the March 43s, 28,500. Number four, they got that's the put, the first and only put on the top 10, the March 29 puts. Those are looking pretty good. 28,000 of those open. Then we got March 70s. You got a lot of upside here. April 43s, March 40s. A lot of upside that's going the way of the dodo. So what do you think of that, Mark? We had everybody getting burned to the downside in VXXB, I should say. They switch to the upside, and they get equally burned.
Yeah, I know. Upside's going to get burned in XX almost constantly, and so that's really what your issue is here. You know what stuff I've been looking at, I actually got this pitched to me. I'm bidding for it right now, folks, so try not to front run me, but I was playing with the because now the VVIX has started to rally, I like it a little bit less, but I was playing with the April the 26th quarter 1x2 put spread buying 2. I'm also looking at like the May 22-23 cashless. And my biggest position that I'm carrying in the fund right now is the Jan 16-14 put 1x2 cashless as well. I think that vol is really low at this point, in the low 80s, and I'm trying to find smart ways to own premium in VXX, and that roll is getting really nasty now. The spread between April and the cash index is 2.1, and there's still 60 cents left in the March roll. So I really like kind of finding ways to fade double XB down here.
Speaking of ratio spreads in VXXB, the biggest trade of the week out there was looks like a ratio, maybe risk reversal. It was coming up on Thursday. It was the March 29 puts going up 8,000 times for 32 cents versus 12,000, so a bit of a ratio there. Of the March 38 calls for 2 cents. Those were no bid at a nickel, and the puts were 30 cents at 35 cents when they went up. So both of them kind of leaning near the bid. I hope this guy's not selling on a ratio 12,000 of those for 2 cents, because that's not doing a heck of a lot for you, except putting a lot of risk on your sheets. But a funky risk reversal nonetheless is kind of the big trade of the week out here in VXXB. Let's move on really quickly. We're still a little bit of earnings on the horizon. The season not quite done with us yet. Thursday was the big day this week. We saw Turtle Beach, Adobe, Broadcom, Oracle, Dollar General, a bunch of decent names popping off before and after the bell this week. Again, if you want all the volatility breakdowns and analysis, head on over to theoptionsinsider.com. We've got those earnings move results for you up there, courtesy of our friends over there at ORATS. Let's just look at a couple really quickly. Dollar General was the one a lot of people were talking about this week. They went into their announcement. They closed about 120.70 or so, right in that range, and they were pricing in about $6.35 on that straddle. So looks like they were expecting about, about $6.35, and they actually got that works out to an expected implied of about 24%. That's what they were pricing in for that straddle. And the actual move was nearly 2x that, and to the downside, off nearly $11, 11 and change, about 11 and a quarter or so. And I think intraday did even more than that. Remember, this is just going into the actual right after the announcement, kind of. That's when this report snapshot is taken. So off nearly 2x to the downside on that for the straddle this week. There's a bunch of others we can break down. You can find all those for yourself over there on the optionsinsider.com. But now we have to roll on into our final segment. Simon is discovering just how challenging this segment is. It is time to break out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. It's difficult, it's dangerous, but it's fun at the end of the day. It's the crystal ball segment. As we kind of mentioned at the top of the show there, everybody was feeling a little bit of vol last week, but not quite the levels that we saw this week. Simon coming in at a 15. Well, first off, let's pay off where we are here at the end of Showtime. Remember, this is a double prediction now, so the MyX guys making our job twice as hard because we got to predict spikes and VIX cash. Luckily, they're in the same orbit at least, which makes it a little bit easier. Spikes right now into Showtime right about 12:10, so pretty much near where it was at the beginning of the show, and VIX still hovering around that 1275, 1280 or so level. So spoiler alert, none of us were really close. Let's see, Simon was 15 and a quarter. I was liking something around that level. I ended up coming in a little bit shy of that, 14.75. I was feeling a little bit of sell-off and a little bit of some vol coming in maybe towards the end of the week to mitigate that a bit. Mr. Meatball was the lowest among us. Mark, you're right at that 1 point threshold for where we don't count it anymore. You're exactly at a point.
Close. My spikes is not. And that's just because of the rolling piece.
There you go. Blame the mechanics of spikes. That's what it is.
I blame the mechanics of spikes, but I'm pretty much dead on. I'm half a point from VIX, so I'm going to declare victory on this one.
I don't know. I'm going to say you're within the 1 point threshold. I will give you that. Either way, you're the closest of all of us, so I'll let you go. I'll let you choose. Do you want to go first, or you want to pick someone else to go first?
I'm going to let Simon Ho go first.
Is that to make up for making his own trade of the day for him?
Yeah, because I picked his trade of the Simon Ho trade of the day. I think that's going to be a new thing. We're going to do the Simon Ho trade of the day by Mark Sebastian.
There we go.
And it's where I guess if it's a trade that Simon might like. And so I'm going to let Simon go and then you.
All right, Simon, you get the dubious honor of going first again, sir. What are you feeling for this time next week in both spikes and VIX?
Okay, I think that the spikes and VIX are going to be closer because the roll has happened, so they're going to tend to converge towards one another. So I'm just going to give you a macro. I'm going to go 11.5.
Wow.
Yeah.
Wow, you are real. Wow. So where does that put the spoos then? 2,900?
Yeah, I guess so.
Oh, geez. Wow, he's bullish.
That's he's taking your seat on the panel here of the crazy downside. He's not leaving any room for the crazy downside. We used to have Russell doing the crazy upside. Now it sounds like Simon might be in the crazy downside. Wow. Okay, 11.5. Interesting. I was not expecting that to come out of the gate here. And like we said, we're right around those levels we mentioned earlier here in the show. I don't know. I don't know if I'm feeling quite the. Of course, we had so much erosion this week that we didn't really price in. So this time next week, I still have this lingering notion that there's another shoe lurking in the distance out there. So I might take the other side of that. I'm going to go a little bit north of where we are right now. Not a ton, about half a handle or so. I'm going to say 13 and a quarter for this time next week. So that gives you a lot of range. Nearly 2 points to play, Mr. Meatball.
I know. I'm going to go 12.37.
So almost exactly splitting the uprights.
Right. Almost exactly.
12.37. All right. There you go, listeners. That is our volatility montage for you for this week. You've got Simon on the downside, actually, for the first time, 11.5. You got Mr. Meatball in the middle, 12.37, and me playing the Russell role this week of 13 and a quarter. Let us know what you guys are feeling out there. And if you're getting a handle of picking the spikes as well, let us know. Hit us up with those as well. We're always looking forward to that fun stuff as well. All right. Unfortunately, that music means we have come to the end. I know we got a little bit of a late start today. I apologize. We couldn't get your 2 weeks in a row now. We haven't done your questions. That's on me. We'll do a bunch of them next week. Keep them coming, listeners. We love to hear from you. Try. If we can't get them on the show, we'll answer you, throughout the week on the platforms you send them in, email, social media, however, live chat, however you send them in. We make sure to at least get you something if we can't get you on the show. So keep those coming. We do love you guys. And before we go, let's go back around the horn and see. Let's see what everybody else is cooking. Simon, you had the dubious honor of going first for the crystal ball, so it's only right to let you go first for the plugs. I know you guys are really have all things focused on the settlement. So is that what you probably tell everybody to watch next week? Is keep an eye on all the settlement coming up on Tuesday and into Wednesday?
Yeah, I think so. Without a doubt, that's the most important feature that people need to get comfortable with. So this is our first version of this. So I think that's definitely the focus for us. We're also going to be starting to disseminate a weekly sort of Spikes newsletter. So that will be coming online from next week as well.
Oh, fun.
And look forward to the forthcoming Simon Ho trade of the week, brought to you by someone who is not at all affiliated with Simon. There we go. What could go wrong with that from any sort of perspective? Mr. Meatball, before you get Simon in too much trouble, what is going on in your neck of the woods this week, sir?
Yeah, if you're interested in learning how to use options and you're a high net worth investor, a registered investment advisor, or money manager, go to optionpit.com/RIA master, and we'll offer you a course that has 12 continuing ed credits for certified financial planners at just the cost of $697. Use code CFP. That's Charlie Foxtrot Papa 300.
Charlie Foxtrot Papa. There you go. Optionpit.com to learn more. And Shelly had to hop off, but of course, you want to learn more about the spikes itself. All these questions about the tickers and things, you can find it all. You can find it on our website, links to it in the show notes, things like that. Or just type MIAX and Spikes into Google, MIAX and Spikes. That'll pretty much, the first link that comes up will take it to this MIAX Options overview page. It's MIAXoptions.com/spikes/overview. It's got it all there. Contract specs, it's got the quote, it's got the ticker, it's got a sweet little video you can watch kind of explaining all this stuff in a little bit more detail. You can even find links to this show there. Go figure. So head on over to MIAXoptions.com/spikes. And then click on the overview there. You'll see all that good stuff. And on behalf of Shelly and Simon and Mr. Meatball and indeed myself, I want to thank all of you for downloading, streaming, subscribing, sending in questions, voting in our polls, all the fun stuff that you guys do. Keep it coming. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.